We'll take a quick opening series of remarks, and then I'll bring up a panel which will do justice to the topic, and then I'll open the floor and we'll have a big conversation, and then we'll live happily ever after. Amen. Wonderful. So I just want to mention some of our key guests, very special guest. You can call him a colossus of banking on the continent, former Group CEO of EcoBank, Mr. Bentsi-Enchill. Please put your hands together for him. Right. We're also very happy to have Managing Partner Bentsi-Enchill Lecha and Nkoma Setasante. We are delighted to have the Managing Director of the Ghana Stock Exchange, Ms. Abnamwa. We're also very privileged to have from the Bank of Ghana, this lady is the head of licensing and product approvals unit. She's called Nancy Imadi. And we are also very happy to have joining us from the Securities and Exchange Commission, the head of issuers, Dr. Jacob Edu. He will explain where the doctor came from later on. Let me stay in my lane. And last but not least, we have from the Minerals Commission, Mr. Wisdom Pupulampu. Did I get the name right? Wonderful. So as you can see, the panel is quite broad because there are many angles to the discussion. And we've also invited you because if we missed any of the angles, you are here to help us. And we give you breakfast so you don't have an excuse. All right, so what I'm going to do is I'm going to invite Mr. Bentsi-Enchill to set the scene, give us some context, and just be a big man. Every program needs a big man, and our big man is Bentsi-Enchill. So put your hands together for Mr. Bentsi-Enchill. We're so happy to have you, sir. Thank you so much.
Yeah, thank you very much, Bernard. Good morning. And thank you for joining us today. I think I can be part of the us. At this critical juncture in Ghana's economic journey, it is really an honor to give the opening remarks at this significant event hosted by Bentsi-Enchill Lecha and Nkoma, which focuses on promoting local equity participation through the capital markets. I think I can call everybody distinguished there. There are a lot of lawyers, financiers, bankers, etc. So, distinguished ladies and gentlemen, I have not spotted the honorables yet. So, if there is any here, please pardon me. But distinguished ladies and gentlemen, we find ourselves in a time of unprecedented economic challenge and opportunity. One may ask, where does the opportunity lie in this myriad of challenges? I will hazard a parable from the Bible, so I will get religious. Where Samson said, and I quote, "Out of the eater came something to eat, and out of the strong came something sweet." Then as a statesman, I will quote Winston Churchill, who eloquently put it, "Don't waste a crisis." So, distinguished ladies and gentlemen, don't let us waste what we think is a crisis. The recent domestic debt exchange programs, combined effects, and high inflationary and interest rate regimes have left our financial institutions reeling, wiping out capital buffers and devastating middle-income investors. Our capital markets, which are to be ordinarily vibrant engines of growth, are subdued, with the government crowding out the private sector, making it difficult to pool domestic capital to to meet the near absence of credible alternate investable instruments apart from our usual 91-day treasury bills. I can't be contested. I know that Abna is here, but this is my view, so I can't be contested. This is not just a time of crisis, ladies and gentlemen. It is also a moment of opportunity. We must seize it with both hands, drawing inspiration from our people's resilience and our market's potential. By working together and taking bold, decisive actions, we can transform our economic landscape and build a prosperous future for all Ghanaians. Given these challenges, we must rally together and harness the opportunities hidden within this crisis. Here is a call to action for all stakeholders present to take decisive steps toward revitalizing our investment environment and capital markets. The status quo is no longer sufficient, ladies and gentlemen. We must boldly confront the systemic issues that have stifled our capital markets and explore innovative solutions to unlock new opportunities for all Ghanaians. I do really applaud efforts by the Securities and Exchange Commission and the Ghana Stock Exchange in trying to provide a platform that integrates the informal sector through the development of a master plan that brings operators and fintechs to explore opportunities to create an online platform that provides an avenue for investors to access the capital markets. There are also crowdfunding guidelines that provide early-stage funding opportunities for entrepreneurs with very scalable business opportunities. This can be further enhanced through education and expedited implementation and operationalization of these initiatives. This will enhance access for local and foreign investors. There are initiatives to simplify the listing process and reduce compliance burdens to attract more companies on our boards. The government should continue to consider offering tax reliefs and subsidies for companies that comply with local equity participation rules. This will encourage broader participation and mobilize domestic capital. This can include reduced corporate tax rates for listed companies and subsidies for initial public offering costs. We should continue to enhance disclosure requirements and enforce stringent compliance measures to build investor confidence. I think investor confidence is a bit low, and I don't know what you, the players, think. Transparency is critical in attracting and retaining investment. The government, I'm told, intends to list several state-owned businesses on the Ghana Stock Exchange. Privatizing these SOEs through public offerings will not only raise capital for the government, but also provide investment opportunities for local investors and enhance the overall market liquidity. This, ladies and gentlemen, I think should be implemented in haste. Our financial institutions should move beyond traditional 91-day treasury bills and also explore investments in listed equities, corporate bonds, and other financial instruments available on the GSE. Diversification will not only mitigate risk, it will also enhance returns, and it's going to mitigate against what happened recently where we have the DDEP. Most of the banks were really bleeding. Some are yet to recover. We should encourage pension funds to allocate an increased portion of their assets to investments in the local equity market, which is currently 10%, and I stand to be corrected. We should boldly decide to rebalance the risk profile of investments in pension funds to create liquidity on the GSE. This will provide better returns for pensioners and inject much needed capital into the market. Now, corporations and businesses should consider going public and listing their companies on the GSE rather than relying on expensive bank debt to fund growth. You look at most of the banks, some of them, you could see that they are hurting with impairment because a lot of companies choose to go that route instead of going on the stock exchange. Now, I saw one Bayport here. They have been listing bonds in it. Yeah. I think that's the way to go. Today, I know there's a seminar on green bonds, and we should encourage that, diversify, instead of always going to the bank. Of course, I used to benefit that, but I'm wearing a different hat now. So please, well, somebody is playing the truth. Don't get me wrong. Now, companies should also adopt best practices to attract and retain investors. This includes practices in corporate governance, financial reporting, and operational transparency. Building a solid reputation for reliability and integrity is crucial. Ladies and gentlemen, this is one big block to our growth, corporate governance. I don't know what you can do about that, but that is one of our biggest headaches. Abuse of the credit system. Abuse of the credit system by shareholders. As I talk today, there are shareholders who still owe the banks and have not paid. So it's a big issue, and I think you chaps should tackle that. Okay, it's very important. Now, we need education, and here I call on the civil society and the academia. They should continue to promote financial literacy and educate the public about the benefits of participating in the capital markets. We should do more. I know we do it, but we need to do more. Advocacy and awareness campaigns can help demystify investing and encourage broader participation. When we had the DDEP, I realized that for most, they didn't know about Ablayo outfit. They didn't see it as an alternative to investment. People just see the one-way track, and they always thought that governments can default. I always held the view that governments can default. I came from a risk management background, so where I come from, there are limits of it, but I think they reached it. Okay. So we should also continue to engage in research and provide data-driven insights to inform policy decisions and investment strategies. Academia can play a crucial role in identifying market trends and opportunities. We should create platforms for dialogue and collaboration among stakeholders, as we are doing today. Civil society and academic institutions can facilitate conversations that lead to innovative solutions and collective action to promote local equity participation through the capital markets. Ladies and gentlemen, the Ghana Stock Exchange is the epicenter of our financial market. It holds immense potential to drive economic growth and foster local equity participation. We must leverage the stock exchange to create new opportunities for investment and development. And here we've talked about mandatory listing requirements. We've talked about special purpose vehicles by government to acquire equities and to list on the exchange. and also promote the listings of SOEs on the exchange. We must also learn from the success and failures of other countries to tailor solutions that fit our unique Ghanaian context. Now, in Tanzania, despite the challenges, the stock exchange for mining companies, the requirement for mining companies to list on the Dar Stock Exchange was intended to promote local participation. This requirement was very specific for the sector. Now, in Kenya, there have been a striking balance between local and foreign investment, ensuring that national economic interests are protected while attracting foreign capital. Why can't we do that here? And in Malaysia, there is what is known as the Bumi Putera equity requirement. I hope, Seth, you explain that to them. Illustrated how targeted policies promoted equitable participation by indigenous people in business. Distinguished ladies and gentlemen, today's discussion is more than just dialogue. It is a call to action. We must seize this moment to transform Ghana's economic landscape by promoting local equity participation through our capital markets. By leveraging government reliefs, exploring opportunities on the stock exchange, and learning from global best practices, we can create a more inclusive, resilient, and prosperous economy for all Ghanaians. The insights and recommendations from today's panel will be instrumental in shaping policies that drive long-term economic growth and development. Let us be bold, innovative, and committed to making a lasting impact. Our discussion should lead us to make a difference. Thank you very much.
Thank you so much, sir. You've made my work so easy because you have condensed the key issues and you've also pulled out the questions. So I'm just going to ride on the outline you've given. And if I didn't miss what you said, you're basically saying, look, we need to take advantage of the crisis we're in. And these LEPRs could be a good way because essentially it's about not just ownership but participation. And with all the rest of the challenges we face, whether it's the currency depreciation, lack of capital, they all interlink with this subject. So we will quickly get into the panel discussion, and then we will ask some of the key questions he's raised. Hopefully the panel will answer these questions. The way we've arranged the panel, you can see that some of the people are from the regulatory perspective. So we have key industries. So for example, now Wisdom will bring insights from the mining sector. And Wisdom is a mining economist. Is that it? A mineral economist. Mineral economist is trained at Curtis in Australia. Those of you know your mining, that's one of the top 2 in the whole world. So he's here to speak to us from the mining sector. So let's put hands up for Wisdom as he comes up stage. And he's done 15 years or more in the sector. Some of the things he's good at: policy evaluation, research, project evaluation, and he's worked with the Research and Stats Department of the Minerals Commission, and his mother named him Wisdom for a reason. So you need to know that he's not joking here at all. Now, still from the regulatory perspective, so there are many sectors, right? So of course there's a general oil and gas, but we have a very important sector called the payments, very fast growing. The BOG now has a unit under it, which is very, very, very important. And of course, Kwame Opong heads that unit, but Nancy, who's my other panelist, heads the licensing and product approvals unit of the Fintech and Innovation Office at the Bank of Ghana. It's a very busy office, trust me. And so Nancy will leave her busy desk and come and join us and give us some insights as it pertains to that sector. So where is Nancy? Imadi. She's a lawyer, so that helps, with vast experience within the banking and fintech sector, where she's worked on regulatory regimes, risk, corporate governance, and the rest of it. We're very happy to have you, Nancy. Now, we also have the regulator for the capital markets financial sector. In the US, the SEC is much broader, but in Ghana, SEC is very important nonetheless. And the head of issuers at the Securities and Exchange Commission, Dr. Jacob Edu, is also on the panel. Let's put together for him. So, he is a finance and accounting professional with extensive experience in the capital markets, in both the development and regulatory side, and he's done work in IPOs, he's done works in M&As, all of those things, he's done a great job. So Dr. Edu, thank you for joining us. Now, our guest speaker described the GSE as the epicenter of our financial market, and I think that's a very apt description. And the lady who mans the steering wheel of that epicenter, the managing director, is Ms. Abnamwa. Let's put hands together for her. So they are market, quasi-regulatory, a lot of things. And Abnamwa herself has worked in this industry for many years. I mean, when I started my work, we used to interview and prepare for hours to ask her one question. When we ask her a bad question, she would finish it. So I think at the time she was at SAS or something. It was very intimidating to interview her, but these days she can't intimidate me. We are all, you know, we are not the same, but right now I can face it. You know, it was great, you know. These are some people you call to talk to before you do another interview, just to get the angle of the stock exchange, because those days business journalism was very new. So some of my mates like Sendo, Tamaklo, and Co had to actually go and take a GSE course to work on the business desk. Those were the days. These days you can do anything. Anyway, I've lost my train of thought. Where's the last person? Okay, first shall be last, last shall be first. Our other panelists, so as you can see, it's a delicate balance. So we have a lawyer, we have an economist, we have a finance person, and Abuna is, what are you, finance? In between, one of them. So we are beefing up the law side, otherwise the law people will suffer. So we bring in, of course, the host, right? Which I got to set. And if you are managing partner, it means you are good at many things. So I don't want to sort of, but he's done over 23 years in corporate finance, transactions, debt and equity, capital markets, all kinds of things. Some of his clients are very big. We'll mention their names here. But he's done a lot of work. And we're very pleased at what he's leading this great firm to do. So I'm going to take my seat shortly. But the way I've structured this is we need to understand what these local equity participation rules are in the first place. So I think we will spend the first round to just look at the what's of this LEPRs. I wanted a short, an acronym, but the only one that came to mind was LEPRs. But LEPR is not LEPR is also a mouthful, so I don't know, should we call them LEPRs? I'm not sure. LEPR is a bit some way. So we'll deal with what they are. And then again, our keynote speaker spoke about use the word leveraging the exchange. So that will be my next round. The next one will be about, so what can the exchange do? What can the exchange do for us? Then there's a very interesting angle to this where we talk about special purpose vehicles. Special purpose vehicles. That angle is refreshing because it seems to be the innovation that we want to bring to the conversation. In addition to enforcing rules, making sure the rules are tight, there's an angle on SPVs, and then there's also something else he said about other countries. So Ghana is not an island. We all know that when it comes, I think our previous Bentsi-Enchill lectures was a whole conversation about these regimes and what pertains in other markets. So we are not, even though we like to think we are so special, look, money can move to Kenya, it can move to Seychelles, it can move to any place. So we'll look at what other countries have done, good or bad. So that will be like the country comparison round. So whether it's Kenya, whether it's Tanzania, whether it's Mozambique, we'll look at that. And then we'll sort of tie the loose ends by how do we implement this? Because it's not just about having a great idea, right? How do we put the framework in place to implement this? And then how do we monitor and evaluate? So it's like 4.5 rounds of questions. So it looks like a national science and maths quiz. So be praying for me, and then those of you in front, put your hands together one more time. and then I'm going to jump straight in. So what I'm doing is I'm going to start with the sector-specific people, right? So Minerals Commission, Bank of Ghana, you are already overseeing organizations that have to obey some rules when it comes to local participation, okay? So I think, let me start with the wise one, wisdom, right? What are the key local equity participation rules in your sector, or the rules for the regulated entities in your sector?
Right, thank you, Bernard. So if you look at the mining sector historically has been predominantly foreign owned. So if you take Anglo-Gold Ashanti, the Obuasi mine that started somewhere around 1897, it was in the hands of foreigners. And if you look at the landscape in terms of ownership, largely has been in the hands of foreigners. So government at a point in time took a policy decision to allow the locals to take equity in the mining operations. And that gave birth to the idea of local content. In our Ghanaian context, if you look at the policy objective is to achieve basically two things, using the local content to retain value in terms of, if you look at the mining operations, they do a lot of purchase in terms of input into their production. So how can we use the policy to make sure that most of these input or consumables that the operating companies use can be sourced locally? Because if you look at the value chain of mining, a lot of value is within the procurement area. So if you're able to use that policy to get part of that procurement, one, you are going to create employment for the locals, you are going to develop the manufacturing sector, and you are also going to retain much of the expenditure that goes into the operations in the local economy. The second idea is to use the policy to get Ghanaians to own share in terms of buying shares in the companies. So the minerals and mining regulation, which is the local content and local participation, came into being in 2020. The LI was passed in 2020 and became operational the following year. So we are looking at goods and services. We are also looking at employment. So the framework provides for certain category of roles within the mining sector that Ghanaians are to take up. So for instance, we take the Anglo-Gold Adriapim mine, for instance, the MD, all the workers within that setup are largely Ghanaians. Okay. So the I and the export gold, there's a requirement for local content.
Is it the same requirement for a mining company as it is for a mining services company?
Yeah.
Same requirement in terms of
requirement.
Because I'm told, and I believe it to be true, that a mining company must list at least 20% of its equity on the GSE if its planned expenditure exceeds a determined limit within 5 years of operation.
Yeah, so Regulation 13 provides for listing on the Ghana Stock Exchange. So what you are referring to is the Regulation 13.2.
All right.
That if a mining company exceed the threshold determined by the minister, you need to list 20% of that on the stock exchange. So there are two legs of it. We are largely dealing with the equity side of it, which is the listing. Mm-hmm. But you also have the procurement part that affects both all the other operators.
Wonderful.
But when it comes to equity, you must be an operator.
Wonderful.
Yeah, which is the mining company.
I'll come back to you. Let me go to Nancy. So when it comes to the payment sector, what are the insights or the state of play when it comes to these LEPRs? What are the requirements for somebody who wants to start a payment settlement company in Ghana?
Thank you very much, Bernard, for this question as well. And of course, before I go ahead to address the question, I want to send you warm regards from the Director of the FinTech and Innovation Office, Mr. Kwame, in whose stead I sit here with you this morning. And of course, I'm privileged to be in the company of most of my seniors, and especially Mr. Seto Sentif, under whom I also did some internship at Bentsi-Enchill. So I'm very, very privileged to be here. Back to the question, Bernard. The payment systems infrastructure in Ghana of its shareholding. And the rationale behind this provision is that, in fact, to put this in context, we may also want to consider the discussions that we had in Parliament. So you consider the discussions as reported and enhance that, and you would see that there has been a deliberate effort by the legislature, the framers of our laws, to ensure that there is actual Ghanaian participation in payment infrastructure. See, today you and I can just pick our phones and make transactions. We should have that participation within those entities. Look, you and I will go to bed at night, right? But the digital economy doesn't sleep. And we are hoping, in fact, I am praying that the people that sit in boardrooms who represent you and I and are making decisions that is going to affect our payment systems, are making decisions that are nationalistic and will affect you positively. And so this intentional effort to ensure that we have that local participation within our payment infrastructure is very key, and is something that we jealously guard. I'm sure a lot of people here who have encountered the office will see how passionate we are about this provision to ensure that we don't only have just Ghanaians, but we have Ghanaians who have the know-how, we have people who have the interest to participate within the space.
There are two straight-looking white people behind him, and then they said the company belongs to this guy. You all know it's not true, but so to be honest with me and tell me some of the challenges you face in making sure that this 30% thing works and how you resolve it.
I'm so happy about this question because it's one of the most difficult things that we have to do as part of our review process to license entities. And I can tell you for a fact, the people that have gone through this process can testify that we go through a very rigorous process to ensure that we have people with the right mindset and who are actually there to participate indeed and not just on paper. And so you would see that we have a lot of interviewing process where we invite this participant to actually take us through how they've gotten to know the business, what is their understanding of the knowledge and all of that. But one other challenge that we see is that we have a lot of the people in this room also serving as advisors and promoters for these entities. You are the ones advising them. What are you telling them? You know, we have people that are also coming with all sorts of models trying to circumvent the requirement. And interesting, we are also just like you, and we have an interest which is, you know, more nationalistic than an individual or private interest. And so we always try to bring everybody back to the table and consider the overarching interest, right? But the other thing also is that most of these entities are well established in roadshow to maybe Makala women, telling them about the investment opportunities and what they can be doing within the space. Have you ever even considered market women in Kejetia? Have you looked at cocoa farmers? There's a lot of opportunities out there, and you know, a potential amount or quantum of capital that we have not tapped. And so I'm thinking that possibly the promoters who are also here in this room, you may also want to look at other options available to us to be able to tap into that resource, to be able to build that interest, raise that, you know, risk or that investment appetite for people to participate more within the space.
When she said promoters, some of you are nodding. Can I see the promoters in my room? So we know. So these are advisors. Where are you? Promoters, advisors, people. All right. Because we need to know who's in the room so we can ask the question. Let me just end this round with wisdom again. In your sector as well, does the problem of fronting occur? How do you deal with it? Because any comments on that issue of the fact that even though the law is there, it's not, there are ways around it. So yeah, on paper it's there, but in actuality it doesn't work.
Yeah, just like any other sector, you have the issue of fronting, that somebody will come and get a license to operate, but if you look at what is required in terms of capital, you ask whether this guy has the word without to operationalize that. And so how are we looking at it? So how are we tackling it? So we are using beneficial ownership requirements to look at those behind the applications. And as part of our due diligence, we drill down to unveil the actual persons behind the applications and operations to see whether it's really, so for instance, there are category of services and licenses that are solely reserved for Ghanaians. So then the beneficial ownership information becomes very critical to check whether that license or business is actually going to whoever the law intends to go to. So we are using beneficial ownership to manage that aspect of fronting.
This is still round one. Seth, I just wanted you to help me here because there's so many sectors, right? Of course, the panel is restricted to mining and capital, payments, but there's petroleum upstream and downstream. There's all kinds of sectors. When you take a careful look at the LEPLs across, are there one or two insights you can glean? Is there any feature that you can say generally in Ghana, our LEPLs are this, that, or the other? I know it's a very difficult question to ask you, but because your breadth of work, there's telecoms, there's all kinds of things you've done. Are you able to point me to one or two general characteristics around the way these LEPLs are framed, which will be useful for our next round of discussions?
Thank you, Ma'am. And I want to take the opportunity to say thank you to everyone for joining us for this morning's event. We're very grateful. I think from the work that we have done across various sectors, I can point to, maybe let's limit us to two key points. One is the capital point that has been mentioned. I mean, I think that I know Nancy, I've never heard a more passionate advocacy of the issue than Nancy has done. But I think we need to acknowledge that the death of capital in our market is not adequate sometimes to meet the requirement. So linked to capital is the reasonableness of the cap we set ourselves, the local equity participation caps. So I think sometimes we have to be very careful in an industry. So when you take, let's say, the payment industry that Nancy comes from, if you set a cap, in the payment industry is 30%, the cap applies to new entrants in the market and applies to existing players in the market who have a huge valuation. So because the law doesn't give room for the varying application of the requirement, what it means is, see, when you talk about the requirement, if Dr. Edu has a fantastic idea, and at the beginning, the idea requires some minimal amount of capital. Maybe Dr. Edu can get his friends together, and if a foreigner comes, we can get 30% to participate. But it's not the same when you are talking about a well-established business with significant valuation. So for me, the two key points that we have seen across the board, and you see, we talk about fronting. Fronting is actually a consequence of these problems. The one first point is one we need to acknowledge that unless we find a mechanism to pull capital together, it is difficult. The second point is that we need to set these local equity requirements much more flexibly and with much more attention to the stage of development of the entity. So there has to be some amount of regulatory flexibility in the way it applies. So those are the two things that I see.
This is good. But any thoughts on this? We are saying round one, by the way, because I know you've done work in these before you got to GSC. So.
Thank you very much. And first, let me say a big congratulations to the Bella team for this very important thought leadership. And I think our Bentsi-Enchill deserves another big round of applause. He touched on. He made all our lives very easy. I think, Seth, you've talked about a very important point about how we set the caps. But why all of this is important is that we have participated as Ghanaians, as customers of products, as consumers of products. But the key area of ownership, for strategic assets such as our minerals, which have been largely owned by foreigners, as ownership in strategic industries such as payments, telecoms, utilities, banking and financial services, is what has been missing. And ownership is important because it creates wealth. I believe there's no one in this room who doubts the capacity of capital markets to be transformational tools for wealth creation. And that is why almost all the global economies that have done well have built and focused on our capital markets. And when you talk about has anyone engaged the market woman, it's because we haven't focused on developing our capital markets. We all sit here and say, is there money in Ghana? Because no one's bothered to engage and assess this, our immediate answer is no. And yet when we look at the value of funds that have gone into government securities, when we look at the value of money that goes into cement and land and blocks, and which we buy 10 times just to get one right. When we look at the value of money chasing forex and being put under pillows and wardrobes, etc., maybe it's time all of us came together to work to develop these capital markets properly. And why don't people know what's happening in the payment sector? So the capital markets has the private side and the public side. We at the Ghana Stock Exchange, of course, represents the public side. The public side is transparent. So if there's an opportunity for an investor into a company, we create jobs for the media, because the company will announce to everyone. We have a regulator like the SEC who ensures that there's adequate information for everyone to read and make a decision. We have advisors like Bella, like many of my stock brokerage firms in here, who will get a job because they get to analyze this company. We have fund managers. I see many institutional investors here. Gathering pension funds. Every month our CFOs write checks at tier 1, tier 2, tier 3. Over 50 billion Ghana cedis of investments. Bentsi-Enchill told us we put 98% with one issuer, Government of Ghana, and held the rest in cash. And where should we invest it? 50 billion plus, and every year estimated another 500 million coming in. Where should we put these funds? Our private sector tells us their biggest challenge is lack of capital or lack of patient capital. So for me, this is an important discussion for us. If you look at the mining sectors, you said we are spot on. These are huge multi-billion-dollar companies. The law today says that if you have a license to take minerals out of the grounds of Ghana, sell 20% of it to Ghanaians through the Ghana Stock Exchange. So there it's been very specific that use the public market route. We take into account that there are companies that are worth $10 billion. We can't easily sell 20% today. And so what we are doing is coming out with implementation guidelines that takes a gradual approach to the implementation of this. And I think that is one area that, or that's one method by which some of these big caps can be dealt with. Because it's important to have that aspiration. How we implement it is a very engaging, or a process that should engage the entire industry. We had MTN. MTN today is the most liquid, most active stock on the GSE. MTN had a requirement to put 25% on the market and even went up to 30%. They have implemented that since 2018, and we've worked with the regulator, the company, as well as investors. And today, they have met that requirement. And so there is an implementation step that I can share a bit more.
We'll come to that.
That we can use to achieve this.
Now, please put your hands together for Abena. That was a good opener. And a nice segue into round two, because round two is about leveraging the GSE. But I couldn't help but think around when she referred to the market woman, lack of capital that spoke about Hernando de Soto, mystery of capital. It says why capitalism triumphs everywhere else in the West but doesn't succeed everywhere else, probably until recently in the East, is lack of institutionalization of property rights. So you mentioned uncompleted buildings, kiosks everywhere. Everybody has property, but we've not found a way to properly calibrate it in a way that can make sense to a banker, right? So it's something we should think around as a side point, but I really think it's an important part of the discussion, because you can change all the laws, but if the people don't believe they have money and don't have access to it, it's going to be very, very difficult as well. So maybe I'll come to that as a closing point. But let me come to the second round on the GSE. So let's come to Dr. Jacob Adu. So how can what we call mandatory listing requirements, for example, right, on the GSE help meet this local equity participation mandate? Doctor, thank you.
Thank you, Bernard, and good morning to the distinguished participants. You know, just to use the MTN example to highlight the point you are raising. When MTN was acquiring the 4G spectrum from ACA, one of the conditions was that it should offload 35% of its shares to the Ghanaian public. So in 2018, MTN did the IPO. Out of that, they raised 11.5 out of 35. And as of today, they are at around 23-25%. So that is the flexibility that Mr. Asante talked about. We may not have all the resources now to be able to offtake the share equity that these foreign companies are expected to offload to Ghanaians. And I think the point we are making is that, or this policy, if it's successfully implemented, is saying that let's empower or allow the indigenous Ghanaians to own part of these foreign enterprises. So MTN is one example. And as you asked, the stock exchange is where, all the funds are, or the capital market, where suppliers of funds are more comfortable to meet people who need money. And so they can give them comfortably and expect good returns on their investment. And also this policy, if properly implemented, we always talk about our dollar. So this policy will have an effect on stabilizing the city. Each time these companies, declare profits and dividends, how much of the profits are retained in Ghana? So the higher the local participation, the more stability the dollar, would be, because this expatriation of cities' dividends out of this country will be minimized. And so I think this is something that we have to take account of.
But does having a mandatory listing requirement in and of itself address the issue, or it must be backed by other things?
Okay.
So for example, the pensions guys, right? 77% of their money went into government securities, right? So the question is, you can ask MTN to list, but if people feel constrained that what regulates how they do their allocations does not give the impetus to take advantage of it, So what I want to talk about, and maybe Abena as well, is not just saying that list, but you need to do other things to allow the listing to, so because the listing is the supply side, but the demand side has to be stimulated,
Yes.
right? So I just want a bit of conversation around how do we stimulate the demand side so that even if you say list, they will feel free to actually list. That's my question.
Yes. So if we take the pension side, for instance, we have their investment guidelines that tells how much money can be put in various financial instruments. And unfortunately, before the DDP, there was a preponderance where several amounts were in government bond. So the regulations should not be from the stock exchange. It should be from the various sectors. So, for instance, you want to acquire this communication telecom license. MTN should be able to tell you that when you acquire this and you are a foreign-owned company, at this point in time, put this amount on the Ghana Stock Exchange. Pensions will say that, fine, before we put our money in any enterprise, that enterprise should be listed, you see. So the regulation should come from the sectors, like we have the Minerals and Mining Act saying so, petroleum saying so. But there are even other enterprises, which may not have specific regulations, but they earn a lot of cedis and they send home dollars. All those people should be brought under something like this. Why would you always be using cedis that you earn here to buy dollars that you don't help in generating? You see? So it can even be expanded, and if it expanded, the effect on our currency will be fine. And just to add that, for instance, the MTN1, it was a single condition put on a particular, you see.
Okay.
Unlike the petroleum and the mine where it is a regulation. So I think the regulation approach will be fine.
So Abena, we all agree on the supply side that mandatory listing requirements will help. But I want to deal with the demand side. What else needs to be done so people can take advantage?
The demand side there has to be a lot of education. So on the NPRA, they have done an excellent job so far of even revising their guidelines, prescribing now what they call constituent. The person joining a pension scheme who's 30 years old has to be put into a scheme where the majority of the investments in there should come from what they call variable investments, i.e. not in government treasury bills, in the real sector. And a person who's 55 years old should be put in a more conservative sector. Their biggest problem is, what should we invest in? On the GSE today, there are maybe maximum 5 companies, Access is sitting there, that they want to, they can take exposure to. They have limits on their holdings in one single company. They've maxed it. Where is the supply? We actually are at a problem of where is the supply? Where are the SOEs that should be put on the market? Why are we not moving fast on it? Where is Ghana Gas? Where are all the banks? We see their financials every day, every quarter, showing good profits, paying great dividends. Many of them listed everywhere in the world, in their own parent companies, but not in Ghana, where they are operating and doing well. So the supply side has become a big problem. Getting the private companies to step up, getting banks to set up, getting insurance companies to step up, getting more SOEs. Many very good companies need capital. Every time they need capital, they go back to government. When there is the private sector, when there are individuals with savings and they are tired of buying their 30th apartment and looking for where else can I put my money in? And so education is important. What the laws do is bring opportunities to the table. When there are opportunities at the table, there starts to be education. Toronto Stock Exchange has 40 companies that are listed on that exchange, where their biggest assets or their only assets is in Ghana.
Wow.
The Canadian teacher is being educated because there are quarterly investor calls. The Canadian student is being educated because they are monthly. You should go to PDAC and see what they are doing. And yet there's no Ghanaian benefiting from this education that brings them to the table. So the rules and the laws are very important. It gives us the opportunity. Once that opportunity comes in, we begin to see more of the things that Atlantic Lithium did on their listing. We got 100 fund managers in the room, and they started the education. We get the quarterly investor calls. People begin understanding what it is, and they begin to start the investment process. So the supply side today is our problem. The education has to happen, and all of us have to be part of that process.
Just a general thought for the panel before we move to the next round. Is there also a cultural issue? And I'll give you an example. So when I went to do my MBA, some of my mates who are from Western world, when you ask them, what have you done? Oh, I went to business school, I started a company with my friends, and I sold it, and I decided to come and just do an MBA because I want to. So like, the selling companies is very easy, right? Now my mates from Ghana and Nigeria, when they go back home, they go and work in their grandfather's company because the company is for one person, and they don't want to share with anybody. So that's one side. So the question of an equity culture is not really, even going on the market is not something we think about. Companies have to be owned by us. We go for loan, so that's the second dimension. When I need money, I go to Albert, he gives me a loan, and I pay back, but the company is for me, I'll die in my socks. I don't want anybody to come and be part of it. So I wanted a conversation around, is it a cultural issue, or is it just because of lack of opportunity? That the mindset of the average company owner who builds a company with sweat and blood, he doesn't want to bring somebody come and tell him
for joining
how much
us
loan he
today.
can take, but he can't
To
travel
the
first
Bentsi.
class. The company is for me. Yeah, so maybe, Abena, I don't know, you've worked in this industry for a long time enough to address this. And Dr. What do you call it, Edu as well. Do you think it's more ingrained in the way we perceive a company? It belongs to me. I don't want to share it. Don't come and tell me what to do with my money. It's called Aloski and Sons. Right? Any thoughts on that? Is a bonus question for this round. Anybody can answer. Anybody can.
All right. I think it's a cultural matter as well. You see, we have enterprises that are not widely owned by a lot of people. They wouldn't want other people to also see what they are doing, looking to. In the capital market, you have to open up your books to people who want to invest in you. These small companies wouldn't even want to hire an independent MD, or don't want to bring people to come and sit on their boards. And if this is the approach you want to have, it's difficult having a third party having to come and put his money in your business. What is the guarantee that he's going to earn any good return on the investment? So our cultural disposition of having to own everything I have and not willing to open up. In this country, we've heard stories where companies prepare different sets of accounts, the one they take to GRE, the one they take to the bank. And that is what will be happening. Transparency is what some of us wouldn't want to participate in.
Wonderful. Anyway, good thoughts.
I don't think it's a unique Ghanaian problem.
Okay.
Anyone who's watched any of these TV shows where someone goes into a family business, I can't remember, the one with restaurants, the rude chef from the UK. Yeah, Gordon, yeah, that guy.
Chef Ramsey.
It's a function of small businesses. It's entrepreneurial. So I think these are things that, as people educate, as people mature in the business cycle of companies and understand the benefits of it, it can be changed. And then also now you look at the young founders. We've seen the whole fintech era. There's hardly 100% owned single entity business. They are all partnerships. And so for me, I think it's a matter that can be dealt with. Not every company is for the public market, first and foremost. But there are many that can come to the public market. And today we are talking about local equity participation. We are talking about companies that understand the benefits of public markets. They are almost over 90% of these companies that qualify, you will find them as public companies, listed companies, or companies with multiple shareholders from their parents in their parent jurisdictions. There are very few that's just one person owned. And these are the type of companies that we are saying they are strong, they have good corporate governance practices, they are making wealth, and that Ghanaians must have an opportunity to be at the table, to decide the direction of the company, to make important decisions that give us an eye into.
So the last bite for this round, I'll give it to Nancy. Any thoughts on this subject?
Absolutely. Thank you so much, Bernard, and fantastic submission by Abna here as well. And all that I'm going to add to that is that even as regulators, we also have a very significant role to play in this discussion as well. And of course, for us, we have even decided that you cannot have a fintech starting as either a company. And of course, we also as regulators taking our responsibility very seriously to ensure that we are doing our monitoring and supervision, ensuring that there's compliance, which in effect also gives some assurance and guarantee to the general public, of course, to know that these entities are sustainable. These are entities that are compliant. Should they ever even be listed, or should they even be looking for partners, these are entities that you can put your money in and you will be guaranteed of some good return on your investment.
Wonderful. This is the Bentsi-Enchill letter and Ankoma. It's a very big mouthful. Conversation on promoting local equity participation to the capital markets. We are here at the Marriott International with a very distinguished panel trying to work out how to, I don't know how to say, catalyze, stimulate, encourage, you choose your adjective, local equity participation beyond the rules into actual Ghanaian, not just participation but ownership. Now, before I get to my next round, we've done 2 rounds of questions, by the way. The first round deals with the LEPRs. Second round, whether the capital markets is the answer. But there's a red cherry, not the fruit, but the car, a red cherry, GW117224. You need to go move your car. I'm told there's a big issue there. So if you know the car number that you drive, or call your wife or something, GW117224, red cherry, we told you need to move it now. So please do. It's a very important announcement now. So let's come to, okay, how do you stimulate this? Seth, I want to start with you. I've heard people say that you need sometimes to create an innovative product, like something some call a special purpose vehicle that government will sponsor to help meet this local equity participation threshold. Put a bit of flesh on that for me.
Thank you, Bernard. I think when we talked about this issue about local equity participation, and I talked about capital, and I think when we talk about lack of capital, we know that there is capital in the market. The question is really finding the capital to meet the products that are available. Now, I think when you look at our terrain and what has happened, and we look at also other jurisdictions, we think that we need to start to be innovative in the way we try to meet these requirements. Now, you will see that across our regulatory landscape, there is an increasing requirement for locals to have participation, and that's wonderful. I think we love it. But the question is how effective it is and how substantially is it being complied with? How much of it is front-end? So all across the sectors that we've talked about, power, upstream petroleum, downstream petroleum, we all have these requirements. Now, I agree with what Abina said about that. There is capital in the market, and Nancy also said there is capital in Ghana. I think an example is the MTN, and we worked on the MTN IPO. And I think potentially the biggest IPO in our market. Now, it was the only IPO in terms of retail participation where subscription could be done by mobile phone. You could all over the place. Everybody participated. Now, as Dr. Edu said, it still didn't meet the requirement. The amount that was supposed to be raised at participation was not adequate. So that means that flexibility is required. So thinking through it, I've not talked about the fact that we have a problem with the supply side. I think there's a solution which can deal with both the supply side and the demand side. And one of the things that we have talked about in the firm, and I think it's an important point that we have to think about, is having government-sponsored SPVs as the vehicles to use to facilitate local equity participation. Now, what do we mean by government-sponsored SPVs? Now, every time I hear as a lawyer, I go into a room to discuss something and say, government is participating in some company, I just say, please, it's a very bad idea, drop it. But this is different. This is different because when we say government-sponsored, we are not saying that government is going to be an anchor shareholder, it's going to be a type of entity where government comes, every change in government, and MDs are dismissed. We are saying that there are two options. We could have an entity which is one SPV in the market. We say this is an SPV set up to be the SPV that is used to acquire equity in all the sectors which requires local participation. That SPV will raise capital from Ghanaians, and that SPV will be listed on the Ghana Stock Exchange. Now, what that does is that we have the supply side, we have an SPV coming to market to list on the stock exchange. Pension funds can invest. And on the demand side, we have the investors being able to invest in this SPV. Now, so one of the options is having an SPV, this SPV, that one, we can have one SPV that cuts across. But it may not be a very bright idea to have one. We could have several. So we have an SPV. If you go to the power sector, there's a capital requirement. You have an SPV for the power sector because risk and commercial benefits are cuts across different. They're different. So we have one that is for each sector, and that SPV raises capital, invests in those equities, the minimum capital requirement, so that if you are a licensee who is given a license, you are required to allot equity to that SPV, which then goes to the market to raise capital. Now, there are two key points that we need to answer. How is the SPV going to be capitalized to raise money, to be able to buy these shares? The SPV, when we set it up, doesn't actually need to raise capital from the beginning. Because when we say, let's say we go to fintech has 30%. People are struggling to meet the requirement. So we set up this SPV. The SPV has an allotment. It doesn't hold the shares yet. Now, on the back of that allotment, we know that it needs, let's put it just $2 million to be able to buy shares that are required by, that companies that hold licenses are required to offload to Ghanaians. It goes to the market, it goes to the pension funds, it goes to you and I, it goes to the market women that we've been talking about to raise that capital and uses that to acquire those shares. Now the question is, who manages the SPV? As part of the structure, we could have fund managers that we appoint. There are several fantastic fund managers in the market. So these SPVs become somewhat like collective investment schemes that are used across the sector as vehicles to facilitate local participation. Without political maneuvering, without fronting, these are listed. Now we can think about whether when we list these entities, we are only limiting them to Ghanaians as shareholders, or foreigners can participate. I think when we think about these matters, one of the things that we need to think about is that there's an advantage of having a company listed on the capital markets. That advantage cannot only be limited to the fact that there are Ghanaians who are shareholders. It's the fact that because they are listed in the capital markets, those equities become available, that I can participate when I want to. They're available on the market. And so, and also one thing that people talk about is putting restrictions on secondary market trading. Now, when you put restrictions on secondary market trading, let's say these SPVs, we say that it can, if I hold shares, I can only sell to a Ghanaian. There are two significant downsides. It limits liquidity, potentially affects valuation of that stock on the exchange. So these are the ideas that I think regulators should consider as a means for meeting these local equity requirements.
Will the GATT be an example of this?
Fantastic. GATT CEO is here. He will love me for saying it's a fantastic idea. So for those who don't know, GATT was set up by the government as an SPV to facilitate investments in banks that well-run Ghanaian held banks that couldn't meet the last minimum capital requirements that the Bank of Ghana brought out. And that, in my view, has been a success because but GATT relied on the government to raise funding to do the investment. But remember that the key part of GAT's structure was for GAT to go to the market and raise funding to invest. And so it's a similar structure. You could use GAT as a tool to meet local equity, and GAT is 100% owned by Ghanaians. To use GAT, an entity like GAT, to meet these requirements by raising capital from the public to meet the
So
requirements.
you could do a GAT for the power sector, you could do a GAT for the mining sector, you could do a GAT for telecoms.
Fantastic.
Because even in the telecoms, we are facing some of our companies, the government shares are essentially worthless because they don't have any money. So you get my point. So, but the question is then, does GAT become the test case of how this works? Is it structured in the way that... Okay, why not? Give him a mic. Help me. Why not?
I think that...
Oh, please give him a mic. Yes.
I think that at an appropriate time, you and I could discuss GATS on your show.
Okay.
Very good, but the politicians hate problem. We have such a divisive country that one side doesn't see any good in the other, and we destroy very good structures like GATS. We can talk about that. Thank you.
Word to the wise is enough. Having said that, I mean, this is a... Are we live on air? No. So this is a Tata Mouse rules, whatever. So we can still use GATS. Right? Because I feel like we always work from what we know to what we don't. Right? So if you say a special purpose vehicle, there's one already created for a specific purpose. This was to raise funding for banks which were distressed, yada, yada, yada. But you've said this can be done in various sectors. But I wanted your take on this. Is it... So will the SPV be listed there? Is that the idea? So that this SPV then lists?
Yes. So the idea is to list the SPV. Because I think one of the ways to raise capital, pension funds, they can only invest in listed equity. So when you list the SPV, it allows participation by pension funds, which is critical, and then also democratizes participation in the sense that the point that Nancy raised about capital available, the retail side in our markets, with our mothers under their beds, it allows the participation by these people in key national assets, indirectly through the SPV. So the SPV would definitely have to be listed as a condition.
You know, it's interesting, the points he makes about the politics, because the name GAT even is trust, right? So once trust is eroded, the inclination to even patronize becomes an issue. And by the way, I need to announce that I think the Supreme Court affirmed the legality of VAT, because I think it was a week ago that somebody had taken the setting up of GAT to court, and the Supreme Court declared. No, I'm giving information. So my point is that the Supreme Court has affirmed that GAT was legally set up.
It's not just somebody.
Okay.
It's an MP.
Okay, so this is the one of the leaders of the minority.
Yes,
took
an
the matter to court.
honorable man.
Wonderful, but the court has said that GAT was legally. This is the Supreme Court, right? So we've made progress. So I need to interview you because I feel you have. And I think it's important because you see, the word trust is not to be used loosely, because if the public or half of the public sees this as an MPP thing, then it destroys it, which is its pain. All right, so it's a very important discussion, which also means that when such things are brought up, civil society, academia must weigh in ab initio. So it's not just an MPP government thing. Do you get it? Because it was almost like stillborn, because the opposition didn't like it. I don't know if there was enough consultation to set it up, but I'm not here to answer Ghana's political questions. The point I'm making is that there's a the key issue of trust. Trust. All right. How do we stimulate that? Maybe Abana can comment a bit about that as well. Where do we get that trust from?
It comes from independent regulation. So what Seth has described is what we see essentially, just for simplicity's sake, a structure we've seen under collective investment schemes, where something has to be done and we all pool our resources together to acquire an asset. And I think it's a great idea, and it requires people to sit around the table to structure it. It means this is a complete private sector entity that a regulator like the SEC, for whom something like this will fall under, will make sure that all the things it needs to have in terms of transparency, in terms of governance, in terms of accountability, in terms of reporting back to its owners, valuing its assets properly, all of that. The SEC is well equipped to do that. And then the vehicle on the exchange for us, we will make sure that periodic information goes to members and facilitate trading for those who want to come into it to come in, and those who want to exit to also exit.
What?
So these models work, and whichever form we use to raise capital, to implement our localization requirements, there are models that are around that we can customize to our needs. The key thing, and I think Albert said it, is for us to act. I want to know which are the applications before the FinTech office. How do we get to know what's available there? How do we know? For me to even say, I want an opportunity to participate in this. I don't know if any of you know what is available. So that's why the importance of public markets keep coming up. We've just had a few weeks ago some transaction put aside because many people are questioning the transparency and how this particular bidder won that transaction. I'm not here commenting on if anything untoward happened. But imagine that same transaction had been put on the market. It's transparent, everyone knows these hotels, etc., and they come in. So there's a big point for the knowledge, for the transparency, for the regulator like an SEC, for the requirements it puts on advisors, like lawyers, accountants, etc., for that information pack that we put together called the prospectus, for the requirement the GSE says, come and do your facts behind the figures. Akwesi is here, Bayports, all the companies that do this. For the process MTN went through and how much they spent time educating our Ghanaian pension funds on the value of investing in the company, such that today everyone looks for it.
Okay.
So I think for us in the room, I'm not worried at all about an SPV as a method to invest in these assets. It brings transparency, but we must sit at the table, and importantly, we must act, and we must act quick, and it must be private sector led.
Thank you for sort of tidying it up nicely. I'll take a comment from Doctor on this SPV. Then I'm going to take two sector-specific reflections on it, mining and then payments. So Doc, any thoughts on Seth's idea?
Thank you, Bernard. I think it's a good idea. You see, we are saying that foreign companies should offload capital to indigents. Where is the money to take up that which will be offloaded? And so if you have an SPV, you can even use ESLA as an example. You know what ESLA is. It takes taxes from petroleum side there, and then it's used to pay energy debt and what have you. It was structured such that money moves straight from the tax people to an account in Bank of Ghana where government is unable to touch that money. See, so if you create an SPV, it will have to be capitalized very, hugely. And so I ask myself, for instance, we have our heritage fund lying down there. What is the money doing in that fund? Can't it be, portions be, in fact, if you look at the law, you don't even have to amend anything. There are provisions in there where investment advisors are able to decide what policy strategy to invest in. Look at even the MIF, for instance, Minerals Income Investment Fund, is the one which has been taking up some of these mining offloadings. It can be asked, in fact, its law allows it to diversify. You can talk about even the Ghana Infrastructure Fund. I ask myself, should get fund be consuming ultimately like this? Should Ghana Infrastructure Fund, for instance, be consuming everything? So all these people, all these agencies can be made to contribute to capitalizing upfront this SPV. It can take a sovereign fund for equity, look at the participation, something like that. And then, of course, when it's listed, it can also raise some funds from the pension funds are there, the retail investors are there. So it's a perfect idea, and there are entities that can be made to invest in this SPV that have to change any law. See? And so it's a very workable idea.
Thank you for the endorsement. Let me take wisdom from the mining perspective. A mining sector SPV to stimulate local equity participation. Sounds good?
It does. If you look at, don't just touch on the myth, which is the Mineral Income Investment Fund.
Yeah.
So if you look at the Mineral Income Investment Fund was essentially set up to collect royalties from and also manage government interest in the mining assets. One of the things that MIT has done is to sign an MOU with the Ghana Stock Exchange so that operations in which MIT has a lot of significant holding will list on the Ghana Stock Exchange. So if you take the Ashanti Gold Corporation, which is a Canadian company, is listed on the stock exchange. Atlantic Lithium, which MIT has an investment in, is also listed on the stock exchange. They are also looking at gold exchange traded fund to be listed on the Ghana Stock Exchange so that it provide opportunity for investors to share in that vehicle. So there's some form of SPV that also in the mining sector that can be leveraged on to have some equity in the operations.
Wonderful, thank you. Let me take Nancy. Your sector is a new sector. I don't know if you have appetite for this type of arrangement.
Thank you so much, Bernard. Absolutely. My requirement under the Payment Systems and Services Act 2019 and infant law, I must say, is that we should have a wholly either a Ghanaian or a wholly owned Ghanaian entity holding that 30% allocation. And we all know you can be either a natural person or an artificial person. And so for me to find an entity in the form of an SPV owned by Ghanaians participating in this ecosystem is something that is very welcomed. In fact, the FinTech and Innovation Office from the Bank of Ghana is one of the most open departments in the bank where we accommodate a lot of suggestions also from industry. So if this is something that is a laudable opinion or suggestion, is something that we are ready to look at and see how we can work together to streamline it so that it will fit within our industry as well, because we're really passionate about having locals participate in this very, very important public infrastructure.
Wonderful. Put your hands together for the panel. So, look, I was aiming for like 5 rounds of questions, but for example, the round comparisons with other countries, I think in my first question to Seth, he dealt with that, so I'm going to shelve that unless there's something else to be said. And I think the chairman's intervention has also raised a more fundamental issue of consensus building around the ideations and then the policy framework, because no matter how great an idea is, if at the beginning it's colored in an elephant or an umbrella or whatever, it's going to struggle and you can feel the frustration there. So I think the last one will be more on who are the key stakeholders to involve as we move forward in trying to solve this problem of local equity participation and local ownership. Because I feel the ideas are there, unless there are any more ideas. The SPV was a nice case study of an idea. If there are any more ideas, we can take them. But what I want us to do now is to come to, so what next, right? Who should be in the room in trying to come around this? So for example, if an election season, should we get the political parties to put in the manifesto some specific things around local equity participation? Is that the way to go, or go to NDPC with this asset development something? how do we sort of strengthen these solutions we propose so we can get some traction on this idea? Let me start with Abena.
Thank you very much, Bernard. I wanted to comment on I think it sinks into what you just said. The idea of the SPV has to be a private ownership. So government through the MEF, etc., it's already participating in various entities. What we are looking at is vehicles that garners private ownership. It doesn't require any politician in the room. Private companies have been structuring funds, collective investment schemes, etc., for a while. Nancy has just told us she wants to see that entity that holds 30% is Ghanaian. So it's a structure that can be done by our best minds in a few weeks or months. We don't need politicians in there. I don't also like things that compels anyone to invest. So anything that compels a MIF, a GIF, a whatever, to a government fund to invest, often, you are not making an analysis that's in the best interest. If that entity wants to participate, let the investment officers sit down and make an analysis and say, in this private entity that's been set up that is to support Ghanaian ownership, and our law allows us to invest or diversify into it, go to your investment committee as venture capital or whatever and put in your money as well. Not a compulsion. Because it has to be private sector, it has to be pension sector led, it has to be the high net worth individual led, it has to be the small investor who wants to take a piece of it but doesn't have a big amount of money making that decision. That decision comes from information, education, access through technological tools, etc. And the fact that there is a strong regulator who engenders trust and confidence in the product. So for me, let's focus on giving more opportunities for Ghanaians to participate in this. Our government has a lot of demands for what it should do with its money. And the private government institutions who have to take investment decisions are mostly well set up with strong investment arms to decide what they want to invest in.
Those are two strong points. So let's not force people, and let's, as much as possible, keep the politicians out so that we will open the floor now. Unless, I think we should open the floor. We've done enough. We've been talking for 1.5 hours. So, have you enjoyed the panel? Do you like what you read? Just for them? Wow. So I'll mix between raising hands and choosing people I know have to say something. So access pensions, you were mentioned, and I've been at events where you've asked for more freedom to even go beyond Ghana. You said, Charlie, they should allow you to even enter the international system so you can, invest our pensions money in a more useful way. So I think the name is Buama. Is that the name? Yes. He's the Chief Investment Officer of Access Pensions. I'll take his comment first.
Well, Bernard, thank you. And thank you to our panelists. So, firstly, I think regulators pursuing this worthy cause or agenda should be pragmatic, right? Allowing for a lot of flexibility and not idealistic. From what I heard, there's a lot of idealistic ideas, overly nationalistic. Right? It doesn't help. And I think to be pragmatic, listing on the Ghana Stock Exchange with a certain percentage of public float should be enough. But pushing a certain percentage to Ghanaian ownership doesn't make sense. I can buy an MTN stock today and sell to the foreigner tomorrow. MTN today, boasts of between 27% to 30% localization, right? Let's verify who the shareholders are. The group, 77.24%. Among the top 20 shareholders, Ghanaian ownership, right, is about 9.12. SNIT owns 2.87, some 6 Ghanaian entities, about 5.48, Enterprise, GES 0.77. When you add 9.12, the rest of us who own shares in MTN combined own about 7.73. Let's assume all this 7.73 are Ghanaian. 7 plus 9 is 16. Have they achieved localization? So listing should be enough. But when we talk about nationalistic, I'm here by the grace of God. I own 2 stocks in Tesla. I don't think that the American government, barred me, from buying, Tesla. Listing is enough, right? And sometimes, they are low-hanging fruit. We are talking about fintech, right? Meanwhile, there are banks in Ghana, making, so much money. The same effort Bank of Ghana is pursuing or using to pursue fintechs, they can apply that to get some of these banks at least to list, using dividend repatriation as a deterrent, right? It can be done. It can be done, and just the stroke of a pen, can achieve that. And this SPV thing also wonderful, but then Charlie, government shouldn't have touched Tesla and Dachi. If really, that is the way to go. I don't think any government sponsored SPV transaction will pick my interest, right? So these are some of the things we should consider. We shouldn't be too idealistic, otherwise it will not help, right? And for those of us who bought shares in MTN, anytime there's localization, our value falls, right? We need the demand to go onto the public market to increase price. I'm a pension fund. If I want to buy MTN, there's no way I'm going onto the market because I know somewhere in the future MTN will come and sell some shares, right? I'll get it cheap. So why should I go pursue opportunities on the market? And that, in my view, has greatly undervalued opportunities for investors who entered perhaps during the IPO and subsequently. So that's just about it. Thank you.
You look like a young man, but you sound like an old man. I'm not even sure. But the lady in the corner. Wow. So is it Kwabena Buama? Nana Buama of Axis. Very powerful. Wonderful one day. Madam.
Hello, my name is Pauline Anaman and I'm with ABN David Africa. I've really enjoyed the conversation so far, and I'm grateful to the panel for the insights on the SPVs. And this has made me very curious. So my question goes to Abner. So behind a private sector-led SPV that is going to be listed are private sector players who have interests. I'm curious about what interests they may have that may affect the effectiveness of the SPV and how to manage those interests, align those interests to ensure that the SPV works. Does my question make sense?
Maybe repeat it.
Okay, so we are saying that private sector-led SPVs, that will be listed, maybe the way to go. And private sector-led SPVs would have private sector players forming that SPV. So my question is, what are some of the interests that may arise among these players who set up this SPV that may need to be managed so that the SPV would work well? I'm curious about that. So
thank you, Pauline. Let me take one more, and then maybe yes, sir. Then I'll take answers. Yes, sir. Can you bring the mic to him, and then the lady here?
Thank you very much, Bernard. My name is Kobe Bentsi-Enchill from Stanbic Bank. And my question probably goes more to Abner, but anybody who can chip in. I liked Abner's closing comments around not forcing anybody to do anything. Now, whilst I think having regulation that encourages the companies to list is a great idea, because you need something to trigger that movement. It seems that there's not as much in terms of incentives, or the carrots that will make these companies want to come to the market. When I talk to some of my clients, and that includes, by the way, your Aloski and Sons, private company, Ghanaian company, like, why should I go and list? What's in it for me? And I don't think there's enough sort of compelling proposition for them. So I'd like to hear thoughts on what can we do in that area to encourage companies to come of their own volition as opposed to just using regulation to compel them. Thank you.
Thank you, Madam. Take the question from you.
Thank you. My name is Perpetua Youngson. I'm from the Securities and Exchange Commission. And my question goes to Nancy. It's in relation to the submission that 30% Ghanaian participation for the payment systems. And she mentioned that they go through rigorous efforts to license. My question is, how do you maintain or manage that 30% going forward? I believe all of us use Visa cards and all of those things, and I believe they are also part of payment systems. So Visa cards, I don't know whether we have Ghanaian participation of about 30%, as you mentioned. I think that for the people who front, if somebody comes to front, what is the regulator, or what efforts do the regulators do to ensure that those who are fronted, if they are found out, what is done? If they are not found out, how do we manage the system so that over the years we still have that 30%? Because somebody can come in front and then hand it over, like the gentleman said. You just front and then hand it over, and then the system goes on. The person has a license, there's no Ghanaian participation, or the participation now reduces to as low as 2% or 3%. So
thank you. Maybe Nancy, answer that quickly, and then Abena, there are 3 questions for you. And there's a general question that Nana Boama asked, which I think Seth and the others can attempt. So let me start with Nancy. And
Thank you very much for that question. And of course, as part of the licensing process, we also, like you've already mentioned, we look at the localization requirement and how entities are able to, let me just distinguish between, foreign entities that come within our space to participate as against Ghanaian companies, where then there's no requirement on a wholly owned Ghanaian company for any equity participation because it's wholly owned. But then when we have foreign entities that come within the space, that's when we have that requirement. And as part of our process, like I've already said before, we do a very strict due diligence on your participants. And so you would see that we give invitations to shareholders to come to a meeting. We engage them a lot, and we are finding out their source of funding to be able to invest in that business. We also go through to find out their knowledge within that industry. So it's not just anybody that we would just wholesale approve to be an equity participant in that entity as well. And it's always an ongoing supervision process. We don't just license and leave entities to operate. A lot of you don't know how heavily regulated the payment system is. Look, entities are submitting monthly returns. We are constantly on their necks. Some of the supervisory tools that we're using, you'll be surprised to know that we do even mystery shopping. You'll be shocked to know that there are days we take off our suits, we put on jeans and t-shirts and caps, we go around the market, we go around very remote areas in the country, doing agent surveillances, mystery shopping, just to find out really what is happening on the ground as well. And so we're in constant contact with our entities that we've licensed. And at the moment, we have 54 licensed entities who are constantly providing supervisory returns for us to know what's happening in those companies as well. In addition to that also, we do not just license and just leave you to operate. There's also a requirement to report or even seek approval before any material change happens in the company, which includes shareholding structure. And so we would have a knowledge of that to probably even give you a no objection before that entity will be able to offload any significant shareholding. So at every point, we're not, we don't deter entities from, offloading shares, but at every material time, that localization requirement must be met. And so we make sure that that is done. And you raised a question about Visa. Visa is not a licensed fintech in the country at the moment. It's a switch platform that we use to do settlement. But then the Bank of Ghana, last year, we brought out a guideline that required that should you do a transaction on a Visa card in Ghana, a transaction that originates in Ghana and terminates in Ghana, there is no reason why that transaction should be routed out of the country before settlement is done. It absolutely makes no sense. Why should you purchase something in a shop, let's say ShopRite, with your Visa card, but because Visa is not domesticated in Ghana, that termination, that transaction, is probably routed all the way somewhere, either Egypt or any other country before it comes down to be terminated. And it also increases the cost of transactions. And so what we have done is there's a certain requirement that we've put out there for all these card schemes to also localize. So there's a lot of conversation with gifts at the moment, trying to make sure that they're able to connect to the national switch so that they do terminations of transactions that are originated in Ghana to be fully terminated here. And so I'm sure before the end of the year, we should come to that conclusion. And we've been in good discussions with all these entities, not just Visa, MasterCard, UniPay, and all of those ones, so that they localize that transaction in here as well.
Okay, can Abena have a bite? I think
Yes.
there were 3 or 4 questions for you. Pauline, Kobe, and then there was a general question.
Thank you very much. I think Nana raised an important matter that we all need to look at. Whether localization needs to be defined to include doing a public offering and listing on the GSC, whether that alone is enough. And I think it's a very important matter that we must look at, and that all regulators who are looking at putting in place new localization requirements and those who already have it we can all engage on, because there's definitely a lot that is worth it looking at for that. Kobe, you're spot on the incentives for the supply side, and I say it's also incentives for the demand side. We need tax incentives. We've seen that it's a model that's worked very well, both in Ghana and in other markets, where we had a differential in corporate tax. At some point, we were able to attract more private sector international companies to list on the market. So that is a very important discussion we've been having with our policy makers, but it's not just the GSC's only responsibility, it's all of us. The pension fund managers need to have it, the advisors have to have this. All of us must go together, sit with our parliamentarians and pass the right tax laws that incentivize supply companies to list and investors also to invest. We used to have the capital gains tax rated to 0. That has been withdrawn. It's not in place, so today we are paying taxes on gains we make. It has to come back. Let's work together to bring this back. Interest of SPV holders. This is an investment vehicle. The interest of the investors is that the investee companies are well run, are transparent with information, are meeting their strategic objectives, and are making money and distributing to investors. That's the main interest in these for owners of these companies. Of course, there are more interests these days. There are ESG considerations, etc. And so SPV holders come into a company with interest as any other shareholder. And that shareholder is to make sure that the companies operate in a manner that are responsive to all stakeholders. They are meeting regulatory requirements. They are providing the goods and services in a fair way. They are reporting properly. And that is why, for me, private sector-led initiatives are important. But I'll let Seth address any additional issues.
Thank you.
Thank you.
Nana want to raise several points. There are two of them that I want to just touch on. Look, I think the point about that we need to do away with caps or, say percentages, and say that listing is enough. I mean, I think that's where I want to get to. If you wake me up in the morning and ask me, that's where we want to get to. But I feel that we won't get that, because this issue that is too nationalistic. I think there are localization has significant, there's a political issue because it is a tool used to address historical imbalances in economics and economic participation. We can't ignore that. But I think that there are deep conversations to have about when you set the target and a company participates through a listing on an IPO and a listing. I think that, to Nana's point, we should stop at that place. That if the company gets the requirement and lists on the exchange, then the secondary market trading that leads to, because you can never find out who they traded the shares to. So we need to end it there. That the company is listed, the shares are available on the market for Ghanaians. That is what is required. And that is what we mean that we can use capital markets to promote local equity participation. The moment you try to put restrictions that, well, you have listed 30%, so we have 30%. That 30%, like in the fintech side, the company is listed, you must still hold the 30% if we come to ask you next year. That's impracticable. Now, the point Nana makes about that, we don't need government input. Now, I think maybe when I say government sponsored, let me be clear. I don't mean that we become a tool for government, to fulfill political promises. No. But this requirement needs political leadership in the sense that we need to get regulators to accept that this is a tool that can be used in the various sectors to meet the requirement. In some instances, changes in legislation might be required. So that's what we need to be clear. This is a private sector-led initiative, but it cannot be done without political support. Now, you see, Nana talks about that when we say government-sponsored vehicles, ESLA and Dachi have left a sour taste in the mouth of the investing public. Some of you would know ESLA and Dachi, so I won't sort of belabor the point. But you see, this proposal we're talking about SPVs is different from ESLA and Dachi. ESLA and Dachi are debt instruments based on government revenue, and I agree with where the line is going, but it's different. And here we're saying that we need political support to get this as a tool, but it's not comparable to ESLA and Dachi. They're different. But I get his point. I think there's so much distrust about politicians that when you mention that it's political something, then people get very angsty about it. But we need political support for some initiative like this to be implemented. Thank you.
Thank you very much. Let me make this quick announcement. A 4x4 Toyota with GS 9110. Your car needs to move. So if it's your car, GS 9110, please move around. Where's the next round of questions coming from? Okay, please give me a mic for him for a quick comment.
Just back on what Seth is saying, he earlier gave the GATT example, and I think that, well, from where I sit, Seth does the fine law and the in-house pit bull. We were involved in the GATT dispute, and it is the most ringing endorsement of any corporate entity that I've ever read the Supreme Court give out. They affirmed that the government can, under the Constitution, set up a company to do commerce, and that company will not be considered part of the public services. Right? So from where I sit, where we fight, the Supreme Court says we can do it. So the legal basis on the back of GATT, GATT went through a torrid time, I know. Eric was harassed all the time. But ultimately when the Supreme Court spoke, it was a unanimous decision endorsing the fact that the Constitution allows the government to do that. And so we should take advantage of what has happened and then begin to look at some of these SPVs, which may not even mean the government putting out a lot of money, right? But setting it up as a way of even directing attention to the area and providing the support that is required. And so we should, I think that there's no time better than this for us to leverage on GATT's pay and do the right things.
So in a sense, that the judgment has actually affirmed.
Absolutely, it affirms
the solidity.
The solidity.
Yes.
They are, for example, argue that the government cannot buy shares because it's a loan, and the Supreme Court literally said nonsense.
You can't do that.
The government can do that, and it's not a loan. It is it is acquiring an asset. So once it goes to Parliament as part of the budget, they don't need another approval under Article 181 as a loan. So this is a very good judgment that that is here, and I think that provides the leverage, that we require to do.
There's another one. There's another one that says the government cannot buy T-bills because it's also a loan. We'll see how that one.
But that makes sense. The government is giving out the T-bills isn't a loan. It's a government borrowing. I mean, you find lawyers who will call it something. But me, for me, I said the government is borrowing. Then it will borrow from its own self.
No, but because
it makes sense.
Because bills versus bonds.
You people talk all the fine things. Me, from where I said no, it's a loan.
No, so
if the government says give me money,
the court
right, and get a bill, then the government is off to go around and buy some of his own bills. That doesn't make sense.
Short-term instrument.
I know. I know the fine people here will say something. You are saying it doesn't make sense.
Mr. Utu, yes.
Yes. Hello. Can everyone hear me?
Yeah. Okay. Yes, sir.
So thanks to Bella for organizing this. Thanks to the panelists. So I'm looking at next steps in the spirit of the discussion, and I fully agree with what Ace is saying. I think this is a good environment where we can take advantage of the ruling, but I think we have to move concurrently with some of the ideas Seth you are bringing up with the government-sponsored SPV solutions, but also concurrently go along to with some of the private sector-led ones. And the reason is because you are going to have to bring multiple products to the market to meet different needs. The GATS model, I think we've proven works. We've done that since 2019. We've applied it to the banking sector. Thanks to great leadership from Mr. Isian and the rest of the board, we've proven it. The good thing is the budget for 2022 outlined an expansion plan for GATS to move into other sectors. The minister was very specific, mentioned fintech, manufacturing, and a couple of other areas. And I'm hoping that we'll be able to, as a country, go beyond the political issues and then come up with a permanent structure. And other countries have done this and done it successfully. Singapore government did it through Temasek. Temasek started in the early 70s. They brought in all the state enterprises that were not doing well under one umbrella, used the private equity model, transformed them, and today Temasek has billions under its management. It's made so much money, they're investing now significant portions of their money outside of Singapore for the benefit of Singaporeans. Now with the SPV on the private sector part, I think the key players we need to engage are the likes of Nana Boama and the pension side. That is where we have significant pools of money that can be patient. Again, we can borrow from other jurisdictions. In the US, the pensions money has developed the economy. When we talk about the Facebook and the Apple and all that we enjoy, they start right from venture capital, going into private equity, all the way through listing on the New York Stock Exchange and the like. So I think we have to work on both models. And this is where the regulators also need to support. Because some of the ideas that we are going to come up with would be so novel for this economy and the country that you would have to then work with the private sector to see how we can quickly bring them to market. And then over time, we would learn, would adapt, and then would improve them for the betterment of all of us. Thank you.
Thank you. So let me take Martin is here. So this round, I'm calling the people who I believe have things to say. So the CEO of the Minerals Commission, I think was at a different event. He's joined us now. So Mr. Isi, thank you. Even though you are hiding, I've seen you. Your economist has been doing well, but we need CEO approval. So SPV has been proposed, and we are talking about how it works in various sectors. Just your general opening thoughts around this whole discussion around allowing better local equity participation. So can you give him the mic? He's the man in the corner. Thank you. Oh, put your hands together for him. Thank you.
So let me apologize. I think my minister is attending cabinet shortly, so I needed to prepare a brief. So I told Severam I'm sending my minor economist, but I'll try and make it. And then I managed to come in. So I couldn't agree more with Senior Isam Kuma. He said it all. Maybe I'll touch on what you said, but let me just take it from the wonderful statements in Bay. You see, throughout the 70s and 80s to the early 90s, we used to own the mines. We, by that I mean Ghana, we run them down. Takwa, that makes billions every year. Prestia, Duncan Continental, we run them down. So we sold them under Kosiboche, IMF1, SAP, and all those things. and billions are leaving this country. The money always in the mining sector. Last year, receipts were almost 8 billion. As we speak, gold prices are the highest since creation. If it continues like that, I'm looking at 10 billion receipts in gold alone. Where is all this money going? So this is where we should be getting the money from. So Newmont is building a new mine, a half north, just north of their current operations. The commission is this year. It's $1 billion. Why couldn't you raise that money here? So I kind of laud the MIF example. Maybe Ace, we need to do another round. And I thought MIF will have been here. So instead of the state coming in, they will run it down anyway, trust me. Because they will just put square pegs in round holes. And then to the extent that prices are high, everybody is fine. When prices collapse, that's when you realize that the state is not the best place to do business. So MIF sits on a lot of money, millions of dollars. So what do we do with all that money? So now they decided that the state should also take part in investment, but not run the mines through the MIF angle. And MIF is on their own. Some time ago, I think they introduced some rule so that they could behave like the way Codelco behaves in Brazil. You know, Codelco is the biggest producer of copper in the world. It's a state-owned mine. You know, they exist side by side, Valley and BHP and Co. Once the president appoints a board, you leave them. They're on their own. The state doesn't interfere. That's something we struggle to do in Africa. You see? So I think very soon we may have to come out with changes the rules where MIF should not have to perhaps be going to Minister of Finance to decide what you should invest in and all those things. And Abner will tell you, Asante raised close to about $200 million locally. So we can do it. Okay? Asante raised $200 million locally, and it shook the investment community in the mining world, because it means that if you can do it, we no longer need them. This $1 billion will no longer come from New York Stock Exchange, from Newmont. They did it. They raised $100 million from Bank of Ghana in cedis. Yes. And they paid back in gold. That's how come today we have over 30 tons of gold. You understand that? They have invested in Asante Bibiani, Asante Chirano. Okay, so they hold equity. It's our money. It's our solid money. They've invested $32 million in Atlantic. And one of the conditionalities of MIF is that go to the capital market. Today, Ghanaians run all their mines, if you care to know. For the skills, it's not a problem. I have the data. You grew up in 800 workers, MD to cleaner Ghanaian. Newmont has just appointed a new MD for Africa, young man, Rahman. Okay, so it's not about scale, it's about the billions that are leaving this country. This $1 billion to go back. They won't give you that 1% rate in UK or US. They will give you 5%. How much do you charge in withholding tax? So why can't you raise those monies here through Abena and Co? That is why this is very, very important. That's the only way we can indigenize the sector, because we are bleeding. The money keeps going out. Keeps going out. You see, so, and I have come to realize one thing throughout my 20 plus years at Mincom. If you don't force the mining companies, don't do it. Okay, can I give you the best example? The mining companies as of 2022, that's 2 years ago. You know how much money they spent on fuel, petrol? $500 million. Yes. Fuel, if you look at the Mincom report for 2022, is 435 million, you add lubricants, 500, and you have the likes of Total Engine selling fuel in Ghana. How many years after independence? Fuel. What is complicated about fuel? You mount pump and sell fuel. So, if you've been following me, I have been hopelessly aggressive on local content. So, we stopped it in 2019. Where did that money stay? Ghana. So, sometimes when I see people overflogging royalties, how much did you make in royalties last year? Barely 300 million. Maybe it's this year that will make about 400 million because of the high prices. So fuel alone, fuel lubricants alone, $500 million. It stays here. No finance. So we kicked Total. They took me everywhere to the high heavens. Oh, we have 4,000 workers. When the stock is, we treat all of them out from the fuel sector. You understand that? They spend 1 billion on contract mining. You understand that? Yeah. So perhaps beyond just asking the mining companies to list. So when you say you want to indigenize sector, we are not throwing foreigners away. I mean, Codeco is there, BHP is there, Valley is there. Let the miners come, but we also need to indigenize the sector. We want a situation where when you draw the line, so you mention companies, so maybe Ghanaians have 40% here. You mentioned this one, Ghanaians have 40%. Now Ghana Bauxite is totally state-owned. If you take Asante Group, a little over 40%. We need to get there. This is one of the routes to indigenizing the sector. Go and raise the billions. I am not the one who said it. Snitch told all of us that all their investment in manufacturing had failed. If they are invested in mining through the capital markets and all those things, we will not be where we are. So I believe strongly in his last statement. That is it. If we really want to get there, how big is Vancouver? There are more listed mining companies there than any place in the world. And guess what? About 90% of over 400 prospecting licenses are held by Ghanaians. Yes, that's what my data says. So perhaps now the next one we are working on is how to get these exploration companies listed. So they go and list on Vancouver, come and show us on 500,000, apply for prospecting license, before I realize they are building a $400 million mine and they are making billions. You tell people, they say the thing is risky. You see?
No, put your hands together. Wow.
So I don't know whether Pupulampu mentioned the LR24 whatever, 2020. We brought it just to encourage the mining companies to list. Earlier on, before the law, AngloGold was there, Golden Star was listed, they went out because the Chinese bought it, we will bring them back, and I think Asante. The first company to list under the law is Atlantic Religion. And we are just preparing more of them. That is it. But unless people understand this kind of thing, I don't see why SNIT is not putting money in mining. But rather hotels. All those monies, if they are put it in some, that is it. I run a provident fund for my staff, tier 3, tier 4 and all those things. I told them we are going to buy shares. I don't think it is conflict of interest. I'm also getting advice apart from the fact that I'm a lawyer. So I couldn't, so when Seriam said, come and participate in this, I said, come on, I'm coming. But just forgive me, that's the nature of the job. I could even be called and say, come over. So I said, look, even if I'm a military, at least I'll just come and say something. So let's take this thing seriously.
You've said more than something. You've said a lot. Wow, thank you. I want to close. You know, we are closing. So I shouldn't close. I was giving 11:30 and it's 11:33. So people have other meetings. So maybe the man in blue, I'll give the last word. Then I'll take the panel because we have to close. But Martin, thank you. That was, how was that? That was powerful, eh? If all our CEOs talk like this, Charlie. No, Martin. Above.
All right, thank you. My name is Akwesi Abwaje with Bayport. I want to look at it a bit differently. So at 21, 22, I started buying stocks in the Ghana Stock Exchange. But over time, one of the things that you begin to realize is the value of your shares don't appreciate as a comparison to the dollar value. So I think between 2006, I sold all of my, I had shares in about 12 or 13 companies. I sold all of them in 2012, 2013 because I kept losing value. Now, it then takes me back to the bigger, broader question. How do we make decisions as Ghanaians? And I speak to a lot of people. So if I speak to a normal, wealthy Ghanaian man, his first proposition is, rather than get into financial services or to capital markets, I'd rather buy land. Because I know that my capital is protected. And the only way we can protect businesses is to put in the structures that overall would ensure that we are competitive. So today, I can buy shares in Tesla because I know that the market there is competitive because all of the indicators, one, the interest rates is reasonable. Two, you don't see the type of currency depreciation that we see here. So the foreigners will bring in money. They pour money into the banking sector. They come, they mop up all the liquidity. They buy treasury bills. But to protect their interest, they buy dollars immediately and ship it out. 10 years ago, the $400 million that we had as the capital for banks was $100 million. Today is between $30 and $40 million. So the decisions by the foreigners is one that's backed by logic and economic reasoning. And the reason why the Ghanaian is staying away is because they are thinking short term. How do I protect myself? And my question is, how do we work together to get to a point where we can all participate? And until we're able to answer that question, a lot of what we are trying to do will continue to have stumbling blocks.
Wonderful. I want to give the panel the chance to just give some quick responses to some very heavy things that have been said, and then I'll wrap up because we have to go. So, how do I do this? Let me start with SEC. Do you have anything to say? Then I'll come to Bank of Ghana. As for wisdom, your boss has spoken, so you have nothing to say. Then I'll take SEC and I'll end with Abuna. So that's the order. So, Doc.
All right, thank you. See, we have this local equity rules scattered all over this place. We want people to offload. So we also need certainty of funds taking up this offloading. And so if you don't have an SPV, which is properly largely funded, hugely funded, how will you be able to take up these things? So whatever we might, I don't mind whether it's private or public government interest. We have sovereign funds all over the world investing. Has any government taken it over? We can always put in measures that will give some sort of operation independence to those who will be running the entity. So let's look at that, carefully and make sure there are the funds that will take up these things that are scattered in our laws. Thank you.
Thank you, Doc. Let's come to Nancy.
Thank you very much, Bernard. As part of my closing remarks, what I wish to draw our attention to is that over the last couple of years, Ghana has moved its financial inclusion index from a percentage of 58 to now to boast of a percentage of 95%, which means that we have included a lot of our population who were hitherto unbanked, underserved, or had no access to any financial services, to now be able to participate within this financial sector, mostly attributable to the development of the digital payment ecosystem using mobile money as a typical case study. I also want to let you know that as at now, April 2024, the data that the Bank of Ghana has shared on its economic indicators also shows that we have over 668 million mobile money wallets accounts opened for citizens. We also have, as at now, 838,000 mobile money agents scattered across the length and breadth of this country. Beyond that, we also have in excess of 200 billion value in mobile money transactions. All I want to tell you is that all these activities has had positive economic impact on the lives of the average Ghanaian. The person that hitherto was a small holder farmer in a village somewhere that we don't even know the name, today has access to financial services, not only to be able to make healthy economic decisions for themselves, but they're also able to access funds that improves on their businesses, farming, make health decisions, make purchases, sends money to relatives and whatnot. The fine balance that we seem to create is to be able to have a common sense approach to ensure that we balance the act between nationalizing, right, and the interest of the greater good. So our quest to nationalize our digital payment ecosystem is not one that is a personal or an individual agenda, but rather looking at the greater good that serves more of our population than you and I get to see sitting in Accra here and not really exposed to the dynamics and the harsh conditions of many of our people that are found in our rural areas. And so please pardon us if we guard this requirement very jealously. It's not something that we're ready to let down. We'll continue to guard it. And for you as promoters and advisors who are leading these entities who come to make license applications, you are the ones advising them. I don't tell them what to do with their equity participation. All I will be doing is to looking at whether or not they have met that requirement. But you have that opportunity. So if you are advocating for an SPV, they know very well it is something that is of a good nature and a good cause. Why not? Our office is not abhorrent to any such suggestions. And so as you are advising your client, hopefully it's not to circumvent the provision, but to have certain avenues that promotes the greater good, for which reason we do what we do. And so yes, thank you very much, but please, I will be guarding that local equity participation and I will not let it go.
Thank you very much. Round of applause for her. Let me take Seth.
Yes, thank you. Thank you, Bernard, and thank you everyone for coming. I think I have enjoyed the panel discussion, very great insights. I think the point that raised by Abaji, I mean, fantastic point. Unfortunately, I mean, capital market is always a victim of macro issues. We here, we can't solve the macro issues, but I think it's a valid point, but we have to do our part by bringing ideas, having these conversations, and leave those responsible to solve the macro issues. By the time they solve them, we will have the structure to take advantage of them. So I think, yes, it's a very important point, but every time you talk about capital markets as a tool for solving a problem, the macro issues must be in the room. And it is important, but we can't solve them. But that doesn't mean we can't consider these other issues. I think we need to continue to be creative. We, in our practice as lawyers, and I think that's also all lawyers do, we solve problems. I think the key as tool of a lawyer, and we in Bella, let me just be a bit do some marketing here. We say modern law. We try to be creative and commercially savvy, and I think that the conversations we've had here point to a direction that we need to take. And the point about regulatory flexibility in how we approach these issues is important, and I'm happy that we have regulators here who are thinking about this point. But the macro issue is a big elephant in the room. Thank you.
Wonderful. Let's end with, put your hands together for Seth. Wonderful summary. Abena will add the cherry on top.
Very well deserved marketing, Mr. Isi, my favorite public servant. Very well said. What you and MIF are doing is spot on. And we call on all other regulators to do the same. Okay, see, the GSE is just a microcosm of what happens in the entire economy. Anything we do in CD, if we don't manage our currency well, and who's managing our currency? Our spending habits, our investment habits, our investments into companies. That is what is happening, is all of us summed up together. And so yes, we have asked certain people to act on our behalf, but the change comes again from all of us. And that is why what we do with our savings is important. That is why what we call on our private sector, our well-run Ghanaian businesses that die out with their founders. When we call on them and say, give us an opportunity to invest with you, to co-run the risk with you, to co-manage the risk with you, to ensure the sustainability of the businesses is important. That is why we also need the right policies and the framework, the right tax incentives, more companies. Bank of Ghana, make it a condition for all banks. Insurance sector, do the same. That they must list, they must come to market, do IPOs, give Ghanaians the opportunity to invest. We also crowding other international investors. Why is London Stock Exchange what it is? Is it just UK companies? The city is international company. They pride themselves on crowding in international investors. It's our money. It's calling on Nigeria's pension fund assets of over $35 billion. It's the ability to call South African pension funds to come and make Accra or Ghana the destination of crowding in international capital using our capital markets. We will put in our local, and we will crowd in international markets as well. So thank you for the opportunity to start this deliberation. The SPV you are talking about is an interesting idea. It's one of many possible ways to look at, and importantly from today, action. We can't just come and talk. So if there's this idea, we want to support action to move this forward. A year from today, we would have made some progress. Thank you.
Please put your hands together for Abuna, Anwa, and the panel. Seth Asante. We've also had Mr. Pulampu from the Minerals Commission, whose boss came to take the final comments. Nancy as well, and Dr. Edu. Please, and last round of applause for all of them. Really, really insightful. I think Mr. Otu tried to give us some next steps, but at least to wrap up, at least we agree on a couple of things. We all agree that local equity participation management must go up. We agree that the stock exchange is the place to start from. We don't know whether listing should be enough or whether we need to have all these percentages, but at least we all agree that listing is a very important place to start. We also like your SPV idea. We don't know whether private, public, whatever combination, but at least you've given us something to think about, and hopefully we can ventilate those ideas in our next steps. And this is also, I hope there's a rapporteur who can come with some good ideas that you can then present to the relevant regulator as part of the policy formulation process, because I think the insights here have been quite precious, and I hope we've recorded the audio so we can put some sort of policy brief together after this, because that's really the next step. We can talk, eat breakfast and go home, but if you have like a 2 or 3 page policy brief that you can then send to the key SEC, GSE, Minerals Commission, then we can tidy it up and then make a proposal formally. Budget is next week. If you're not enter the budget, but this is more strategy. It's not about budget, it's more strategy. So I think we should put hands together for Bentsi-Enchill lecture in Ankuma. Really, really exciting. It's good to see law firms bringing us together like this. These are the kinds of conversations we need, because for every good thing to happen, you need a conversation to start. Now, to give us our send-off and tell us if there's item 13, I want to bring up partner Seiram Jikunu to close us. Please welcome her. Seiram is a partner at Bentsi-Enchill. Thank you.
Thank you, Bernard. I'd like to thank the panel members for this insightful discussion and for the knowledge they've shared with us today. It's been a really fantastic discussion. They've served us with a lot of food for thought. They've showed us that if local content participation is implemented effectively, it can enable the ordinary Ghanaian citizen and our pension funds to acquire interest in companies operating in strategic sectors of our economy. We've also understood from the discussion that on the supply side, we need to improve our local participation laws to ensure that more companies are listed, and then on the demand side, we need to educate the ordinary Ghanaian to understand the opportunities they have in investing in listed companies. I'd also like to take from Mr. Asian's opening remarks about not wasting a crisis and say that we should not waste the opportunities created by our local content participation laws. We must leverage the stock exchange and promote local participation through the stock exchange. In conclusion, I would also like to say that localization is important for addressing the developmental needs of the country. Our leaders must therefore put in place the right policies to ensure effective implementation so that the country and citizens can derive the desired benefit and goals of localization policies. We also hope that our regulators will continue to engage with industries and stakeholders and take the right approach to implementing localization policies. On behalf of Bentsi-Enchill Lecture and Ankoma, I'd like to thank our panel members, and I also like to thank the moderator for the fantastic job. I'd also like to thank our guest for coming. Team, thank you for putting together this great program. Thank you all.
So, because they are lawyers, they promised the breakfast and it's not yet 12, so they fulfilled their role. If it was after 12, we would have asked for lunch, but we had breakfast. It's 11:50. We'll take some photos. So, first, we'd like to take the photo with the panel, and then I'm going to ask some of our key guests to join the panel to take a photo. So, key photographer, where are you? And so, please rise for a quick photograph. Chairman, please join us for a photo. We'll be happy to have Mr. Isi, please join us for a photo. Mr. Utu as well. Thank you so much. Ace, you are the highest partner we see here. So if it's not against your wishes, please join us for a photo. So the first one is just a panel. And then we'll do a panel with our chairman and invited guests. Mr. Isi, please join us. Mr. Isi, please join for the next one. So to Ace, please join us for this round. Thank you. Zoto, please join us. The last one, if you believe you're a big man and I've not called you, you can join. Zaka, join. I'll be a big man one day. Let me join. Thank you. Some of the breakfast is left. Please help yourselves. We'll see you next time. Watch out for the lecture series in September. Watch out for the lecture, memorial lecture in September.